Good morning, every morning. I keep saying that. I'm so used to saying good morning because I do that. I do my first live session of the day is in the morning, and I always say it to Forex Lens, but it is actually good afternoon to crypto markets. It's 1300 or 1 o'clock p.m. Central Standard Time, and I'm coming to you live from South Dakota, believe it or not. All right, we've got one last day in the normal trading week. That is today, and if anybody else is a trader and trades other markets, you know that Fridays are kind of dull days. Fridays are you love them or you hate them. Like in forex markets and the futures markets and equity markets, pretty much everything gets done. Mm, around noon hour Central Time, or and even before that, when the London session closes, you just get a real drop off in participation. That doesn't affect our crypto markets so much, but we still do see a lower amount of participation in our crypto markets in the Friday afternoons, which makes sense because people have lives. They like to go out and have a good time. It is summertime still, and we just like to enjoy ourselves outside if it's not boiling hot outside or raining like crazy. All right. Today I kind of wanted to go over pullbacks and throwbacks because those are going to be very, very important and relevant for us when we are getting into the next bull phase of a market move. It's very, very common for people to not want to trade pullbacks or throwbacks. And really, there's a difference between a pullback and a throwback. But most of the time, we will just call them pullbacks. And so that's probably what I'm going to end up doing is just saying a pullback. But if we look at Bitcoin, for example, which has caught a nice bid today, actually, we had some selling pressure last night. If you weren't aware of it, a lot of the reasons why we had a little bit of a dive last night was really just due to the SEC saying that they were going to that they did not approve the Winklevoss twins cryptocurrency ETF. And actually, there was just an article I was reading about this. It was by, yeah, and there was an SEC commissioner disagreed with the agency's ETF rejection. The thing is that this entire, without going into too much detail and without getting so conspiratorial, I would imagine that if you have the name Vanguard or something next to your name and you want to do a Bitcoin ETF or a crypto ETF, the SEC is probably going to approve that because, yeah, they're probably not going to do one from a private company startup like the Winklevoss twins have. Like them or hate them, the Winklevosses, they've actually done quite a few good things for the cryptocurrency, in the entire market. Actually, they've been pretty good advocates for it. They've weathered some of the storms in New York way back, but 4 or 5 years ago. So, like them or hate them, they actually have done some positive things for our cryptocurrency market. They'll probably go down as helping to do a lot to legitimize this as a new asset class, for the investment community. And love or hate the investment community, that is where the capital is at. And really, getting in now, or it's like they say, the best time to buy Bitcoin was 5 years ago. The next best time is right now. So we'll just continue to operate with that theory. So, okay, yesterday we had that drop, and it's important to really take into consideration that when there has been bad news about Bitcoin, of which there has been a lot, one of the first signs that you have formed a market bottom in Dow theory, you have your expansion phase, public participation phase, followed by your profit taking, and then your full time bear market, the distribution phase. And so when we're in a down moving bear trending market, one of the first signs that you have formed a base in price, and that doesn't mean that the prices stop going down. What it means is that when there's negative sentiment out, and there's all sorts of bad news here and there, that price doesn't respond to it like it used to. Okay, when we stopped seeing these 10, 12, 20% drives down on really not the worst news on the planet. Like there were some days over here between January and March where Bitcoin had a 21% drop because it said that the SEC was investigating the legitimacy of cryptocurrencies. Now that's not bad news. It's not really good news. It's just the SEC's looking at them more. And to be fair, all we've had is really, really bullish news about cryptocurrencies from the SEC. They've done a pretty good job of being pretty free market about it by saying we need to let this thing go, we need to not interfere with it, and so forth. All right, enough babbling about that. Talking about pullbacks and throwbacks. We have to operate and look at this market now as entering in an early, as exiting a accumulation phase and getting into the early beginnings of an expansion phase. And so, we're going to be in August before you know it. And then August before you know it will be in September. And that is really between now and October is when we're more than likely going to see us pushing beyond that 10K mark, 133 level, and then finally more than likely breaching those all-time highs. There is nothing to suggest with cryptocurrencies that we will not follow the same expansive pattern that we've been following for the last 10 years. All right, 10 years is long enough to have an established trend. Some would argue that we need a full 20-year cycle, but 10 years is actually long enough. I know for people who are new to trading, that seems like a ridiculous amount of time to look at, but it's really not. 10 years is actually a short amount of time. It's not very long at all. And we've already established that Bitcoin has the habit, or the pattern rather, of losing a large chunk. All right. BTD, BTFD, buy the effing dip. That is the mood that we need to be into when we're talking about cryptocurrencies. And really, one thing that you should do, for instance, I trade Forex quite a bit, and I really don't trade Forex without looking at the dollar index. The dollar index tells me how the dollar's performing against the other basket of currencies out there. Okay. Likewise, if you want to trade altcoins, you probably shouldn't trade altcoins or trade any other, like even Ethereum or Litecoin, unless you're paying attention to Bitcoin. Love or hate Bitcoin, it is what everything else is rated against. When Bitcoin's doing crappy, a lot of things are doing crappy. There's a difference between doing crappy and being down a few percentage points to uplift alts in capital rotation. So we're seeing a pretty nice pullback that we had down here. I was talking about this where we might drop down to that 7,500 value area. We're maybe within that zone a little bit, but we'll see. But we have all we really have here is a kind of a textbook example of a bullish flag, or a bullish flag. And a bullish flag pattern is we talked about this yesterday. Bullish flags form after there's been a pretty expansive move up. And Ellioticians will usually say that this is an ABC corrective wave that forms off of the top, and they call it a flag because, well, it looks like a flag. If I can get my parallel channel. Okay, if this is the mast, this is the flag. And when I was talking yesterday that these have in an upwards trend, flags and pennants, they have a 73% chance of moving. And if you remember yesterday, we calculated the distance of the move, and that's actually a pretty cool little tool that we do. I'm actually going to have to slide my screen up. So what we measure is, and you can do this a couple ways. You can just use it with a rectangle drawing, or you can use the date and price tool, which is kind of my favorite little tool that TradingView uses. So I measure the range of the actual advance to the swing, and then I measure this swing. Okay, and I just take half of the original drive up and the entirety of this move. So I'm just going to take that, just kind of roughly place it on top of this, and then here. And so if we're looking for forecasting a price range of where it would go, that is roughly right up here. So close to that 10,000 value area. And we can even go a little further with this by seeing if we could isolate the profit target a little bit more easily if we want to use Fibonacci projections. Okay, this is telling us the 618 is right here from that swing. But if we're doing it from this swing, okay, that probably makes a little, yeah, really this entire zone here, and then we can just get rid of all this. Oops. From those two fib zones and from those price projection zones, we can just highlight an area here by saying that our price target range that we're looking for is between the 9,700 and 9,400 value area. That's kind of in between the two fib zones and at the very top of our price range area. Okay, we're not looking for an exact price level. We're not even looking for a very more we're just looking for like a zone to target where we may consider taking profit. And regardless of how high or how high it goes here, it's be very dangerous to not take profit when you get to 10,000. Okay, there will be natural, actually not right at 10,000, really right here before 10,000 is where we really want to consider peeling off some of our trades into profit. Okay, because that's a psychological resistance level. But ultimately, if we want to be very particular about this, the $10,000 value area is actually not that important of a zone based on a couple of factors. Oh, we just blew right through that. That's pretty effing bullish. Yeah, I didn't look at the square 52 lately. Let's do the daily. I'm going to squeeze us in here just to where we're really kind of near the all-time high zone there. And I want to see the volume profile, visible range. And give me a second, I just got to change these values. And okay. All right, so this is the volume profile for from the all-time high to where we are trading currently. If you look on the screen, you can see that we have a B-shaped profile. And if you're unfamiliar with this volume profile, really, this is there's volume price analysis and then volume at price analysis. And volume price analysis is a pretty simple, you probably all do it, where you look at the volume bars, the vertical volume bars, and see what the, how much has been traded during a particular time. The volume profile, this is one of the probably hidden tools that can help make you very successful in your trades, in both your entries and your exits, and that's the volume profile. Volume at price analysis, that is studying how much of something has been traded at a particular price level. And so when we see these horizontal areas, this is telling us, for instance, right here, and we could actually see the values. If we were to drop it to like 30 here, and so we could see the values of the buys versus the sells. So like right above here where my mouse is at, that's telling us that in this price range we've had 169,000 buys versus 140,000 sells, 141,000 sells. All right, but what I'm saying is that if I bring this down to the 10,000 value range, oh God, that's not what I wanted. If we look at that $10,000 value area, there is not a lot of volume that has been traded in there. In fact, between 10,000 and 10,500, 10,600, there's actually a low volume node. The high volume node is right here, okay? If you want evidence, or if you want to see not only where do most people start trading, but where are professionals accumulating, where are institutions accumulating, then this is what you're looking for. You're looking for the top, some people say the top 12 to the top 40% of the volume profile is where you want to be buying. This is all an accumulation zone in this price. And so we also trade volume profiles according to the kind of the pattern that they make. So, there's P-shaped profiles, there's B-shaped profiles, there's P, D, Bs, there's a whole bunch, but a B-shaped profile, this looks like the letter B. If we were to flop it around the other side, I think we can actually. So if we were looking at this, it looks like if we were to form a straight line and then curve it, it would look like a lowercase b. And lowercase b's form really due to a long liquidation where a P-shaped, if it was up here, is a consequence of like short covering. So in a B-shaped profile, oops, I'm going to come back here either way. In a B-shaped profile, now the top half is going to be thinner with the bottom here is going to be thicker. It typically tells us that there was low volume rejection. Lower half should have wider distribution, which it does, and it's very typical of long liquidation signaling a pause in price as opposed to bearish sentiment. All right. Granted, this is on a multiple month length of time. But yeah, this formation is it's typically long liquidation signaling a pause as opposed to bearish sentiment caused by the entrance of initiative, sellers reversing the market direction. And what is very common is you identify these high volume nodes, and then those are where you put buys and stops. So we would put, for instance, we would put a buy probably at 11,200 because these low volume nodes are really what you want to look at. When price gets near a low volume node, it gets sucked up into it. It moves really fast. If you were here this morning when we were talking about the Forex markets, I was talking about the Australian dollar pair, and we were looking at that volume profile, and I was mentioning that price would get sucked up into that price range if it entered that low volume node. And right, I was talking about it, it happened. So when we get to here and prices keep moving up, they generally flash up here very fast. Okay, it gets sucked up like a vacuum. All right, tries to fill that void, and then we'd want to sell at the next volume node there, and that's what we're really looking at and seeing have happen here. And we're also looking at the point of control. This is this red horizontal line. This is telling us this is where the most volume has been traded at a price. This is typically an area where you're going to see a lot of support and resistance found. There's a lot of traders I know of. There's a lot of traders in the futures market who use things like Renko or Gann swing charts, and that's all they use. They just use price only based charts where they don't use candlesticks. It's just price only, and then they use a volume profile, and that's how they trade. So they would just use this like with Renko, or even point and figure. Renko's probably a little easier to do it on, but on like a 250 tick Renko, you know, when we're looking at the volume profile, we would just look to see, you know, if we get a few bricks painted above the point of control, that is where we enter long. And then we just kind of sit on it for a while until there's a new level. And you can do it on multiple time frames if you want to, or sessions. But it is it's a very old school way to trade, but it's a very effective way to trade. There's actually, it's one of the ways that I learned how to become profitable, was actually doing the Renko volume profile trading. And then I found the Ichimoku system was much more to my style of trading. So that's what we're looking at. So we are actually, you know, when I move the time frame back here, if I go to the all-time high, we're sitting right on that value area, and we're looking like we have a pretty bullish pullback, and this is being bought. Again, we're going to bring this down to the 4-hour. We don't need the profile anymore. And we can see that, where have we bounced? We bounced off of the 45-degree angle in the square 52. And when we were talking about this last week, this week. Yeah, this Monday, when we were discussing where we need price to really get above to kind of get that next bull phase going, is we need to stay above this 45-degree angle. Because whenever price is below the downward sloping 45 in any square, whether it's a square of 12, a square of 144, square of 52, whatever kind of market geometry you're using, the down sloping 45-degree angle, if you're ever trading below it, you have very strong bearish bias. So the fact that we've crossed above here is very positive. We've tested it 3 times, and the test came on some bearish news, but it has held support. So it's a pretty nice sign that we have bounced off of here pretty nicely, and we're kind of holding above at this pivot, which actually ends up coinciding with the point of control, the VPOC volume point of control. That is a very cool sign here. So looking out for that. Where was I at? Looking at any questions, actually, before I keep going. Questions, comments. Oh, and if you want a coin for me to look at, if you want me to look at a particular chart, please type that in here and we can certainly take a look at it. Okay, so how this may operate over the weekend is going to be interesting. I talked about this probably every day since we started doing this on Monday, about moon phases. So we have a full moon phase starting today, rather tonight, and it's a blood moon, and that is a indicative of full moons. Blood moon's a total lunar eclipse. You often see. Yes. Do you guys give live signals? Yes, I do. I did some yesterday, and I'll be doing some today too. Is it pronounced SOD? Private wallet I'd recommend. Well, I hold a lot of Cardano, so I use their Daedalus wallet, and I like Exodus wallet. That's a great wallet, actually. I love Exodus wallet. So I'm looking at this. This is Bitcoin here, and we have this new moon phase right now. And I mentioned this on Monday, and I was mentioning it, and I want to mention it again today. Is that generally new moon phases are signals for downside pressure in Bitcoin, especially if we're in a bear market. Okay. Every time we see, really ever since we started the big down move last December, new moon phases. New moons will be the moons at the top. New moons have generally signaled bearish pressure for the 15 to 16 days of that moon phase. And they're especially bearish if they appear at or near an important swing high. So we have that sell-off here at that new moon, selling pressure, new moon, kind of flat to actually a little greater, grew a little bit there, but we have lower prices in this new moon, kind of flatness here, selling during the new moon, selling during the new moon. But we have an aberration. Really, I just keep my Ethereum and my Bitcoin that I want to hold. I keep them on Coinbase. Because I figure if I run the you really I don't know what wallets are secure and which ones are not. I don't know if there's any such thing as really secure. But if Coinbase, if my Bitcoin or Ethereum is somehow stolen on Coinbase, at least now Coinbase now they have custodianship rules that they've got to follow. That I think there may be some return if something gets stolen. So I am perfectly fine keeping all my Bitcoin and my Ethereum in Coinbase. It's not technically a wallet. So on these moon phases, one of the big things that you'll see in a change in market direction for a long-term trend, one of the things that I like to look for is an inverse action on price related to the moon phase. So we've been in a bear market, which means that we have a high probability of lower prices during a new moon, except here we did not get that. This new moon signaled higher prices, and unless something horrible happens between now and tomorrow morning, tomorrow afternoon, we will close significantly higher than we did on the open of this moon phase. And we're transitioning into a full moon tonight rather. And full moons for Bitcoin mean that we have a high probability of rising prices for 2 weeks. So even during a bear market, you will see the full moons operating with some support. Not all the time, but actually not much at all. But you'll see that there is sometimes some supportive buying during a full moon phase. And then if we're in a bull market, just like in a bear market, in a bull market, we can see that we have full moons telling us that we are usually near a market low or a swing low, and that we see rising prices during full moons. Full moon, higher price. Full moon, higher prices. Full moon, lower prices. Full moon, higher prices. Full moon, higher prices. Full moon, stupidly higher prices, followed by the bear trend. So we're seeing positive buying during the selling moon, and now we're going into a buying moon. So we're more than likely going to experience 2 weeks of growth. We have 2 weeks of growth. I mean, we're experience two straight moon phases of growth. So we'll have very strong buying bias going forward after today. All right. And if we're going to trade this like a flag, like a bullish flag on a 4-hour or 1-hour chart, then our entry is actually within the value area here, because we always wait for the breakout to happen. Hourly is probably more important. Okay. All right, so within 30 minutes, if we stay above, and actually we probably price it up a little higher. I mean, yesterday I remember writing that the buy target for Bitcoin is at 8,300. I think it is still there, 8,333 rather. All right, this is a pretty standard response off of a bullish flag. We haven't actually had a good, we had a bullish pennant here, followed by a bullish flag. More than likely what that means is we'll see a more series of these drives higher, followed by flagging and pendanting patterns. Let's look at Ethereum. Ethereum is in a pretty good zone here. However, when we talked about this on Monday, I was talking about this mirrored foldback pattern where we see Bitcoin try to trade in the same kind of swings, not exactly the same price levels, but in the same swings. You know, I'm waiting to see if Bitcoin will make a low here over the weekend. If it doesn't make a low over the weekend, then if it doesn't make a low over the weekend, or if it breaks the $480 value level, then I'm planning on entering long. Otherwise, I think it still has some consolidating to lower prices over the next few days. So really don't have a buy entry there yet. Litecoin, I think, is just, it's one of my favorite cryptos, and I hold a lot of it. And we actually have a pretty good breakout set up at the 85.95. Buy stop around there would be appropriate. Cardano. I love me Cardano. Now Cardano's got, when we were talking about triangle patterns yesterday, Cardano actually broke down below its that structure. But we had a fake out to the downside and we returned back into that structure. So Cardano, this is one of my favorite pairs to hold for a long time. It's also one of my favorite pairs to trade. The Bitcoin, either the Cardano tether pair or the Bitcoin tether pair. So if I'm looking at the dollar entry zone here, I'm looking for a break above this high here. So I'm looking at 1773. I'm already in Cardano, but if I wasn't, then I want to trade it on the next leg up. I'd be looking at an entry at the 1779. I think even on our Ichimoku system, that'd be a very valid entry on the Ichimoku system as well. All plays out just fine. Ethereum, let's see what Ethereum looks like with our 1 hour Ichimoku. What's it for? Don't need this or this. Well, I mean, Ethereum, you could do it long at 485. That would bring us above the cloud on the 4 hour, and that would also bring us the lagging span above the 4 hour cloud as well. Oh, look at it from here. Bitcoin's got to break this. This 8,500 value area is also the 135 degree level. It's really got to bust above that. Ethereum, where are you at? Ethereum might have a breakaway trade if it can get above its 360 degree value area. Wonder why it's not. Oops. Okay. Okay, so I got consolidation at the 450. So again, the wavy lines here, if you've not seen this before, these wavy lines represent the longitudinal position of a planet, and in this case, this is the longitudinal position of Uranus. For whatever reason, the Uranal line is important to Ethereum. It is a level that is respected as support and resistance, and these red lines are the divisions between this cycle and the one above it. And so for Uranus, we really need to, we'll have extremely bullish, we have extremely bullish bias anyways, but we can see a pretty good rise here coming if we can get certainly above that 360 and then above here, because planetary angles are probably the most accurate form of support and resistance that you'll find in any price chart. And there's a reason your brokers and a lot of other software companies don't put these don't put this in their software. And it's because it's not a difficult calculation. You could do it on your own. It just takes a while. But I mean, it's really easy to implement. It would be really easy to create an indicator like this on TradingView. I mean, you'd have to update it, you know, a lot, but you can see just here that this is Saturn's line, and Bitcoin really respects that line as an area of support and resistance, and it is actually held multiple times. Even when the line contours, we see that Bitcoin respects that a level. And generally, we follow Gann had this rule: follow the rule of angles, and because longitudinal lines are angles, we follow that same rule. So when price breaks an angle, it'll move to test the next one, and we've seen that happen repeatedly. It'll test it, and we have technically a triple bottom. All right, because triple bottoms are not horizontal level. There's no such thing as horizontal price support. Okay. Horizontal lines on a chart are not there. A lot of trading education teaches that these horizontal levels are static, and they're not. There's only actually harmonic levels are the only static levels of price action, and those are divisions of perfectly squared numbers. But otherwise, just taking a horizontal line and putting it on like any chart and just saying this is a support level because there's these bottoms, yeah, kind of, sort of, you're right, but it is actually not a very accurate representation of any long-term support or resistance, because things travel in waves. And the Saturn's longitudinal harmonic here is a good example of why horizontal price levels are inadequate, because we can see price very much does respect the contour of the longitudinal line of Saturn. And so we follow the rule of angles. Because we found support here, we actually have a triple bottom. And the odds, the rules are that we just move higher. Unfortunately, Optima, Bitcoin, 82.42. So we're near the high of yesterday, and more than likely going to break above that. And we're coming up against an important date in Gann's work. So we got a lot of bullish reasons to be bullish here. I mean, this mirrored foldback pattern is actually playing out pretty accurately with price too. You have the same shape and pattern going on here. Pretty interesting. All right, let's look at some other altcoins though. We were looking at Dash yesterday. Oh, we were doing that out here though. Dash dollar sitting at a pretty good spot still. I mean, on the 4 hour, we're not seeing a whole lot of entry areas on the 4 hour, but the 1 hour is actually showing us a good buy entry here pretty soon. Once the lagging span reaches above the cloud, the Chico span goes above the Kumo. Price is above the cloud right now. Really probably want to play it safer and go above this high here. So 251.47 for Dash. Okay. And then probably want to see Lisk has a, I mean, we're seeing that similar structure as the rest of them. Steem. I had a good trade on Steem this week. This one was very good to me. Daily here. What do we got going on? You know, I thought I had a specific chart for this. Thought I did, but I don't. Oh well. Steem. Sorry. Oh, I love Digibyte. Digibyte, BitBay. Why not just put a list of the coins that I hold for a long term? Waves. Digibyte. BitBay. LTC, BTC, ETH, STEEM, 88, or Cardano, 88, XLM. What else am I thinking? Nano. 8 shares. I know I'm missing one in there, one or two, but the ones that I really hate is Neo. I think Neo is evil, and I think XRP is evil, and Tether. Neo is an invitation to celebrate a big government owning everything, and then XRP is just a shady coin. And plus, I mean, what are they trying to do? Like, facilitate? They're trying to like whore themselves out to banks as a form of a transaction. You know, the banks are going to end up doing that themselves. They're going to develop their own proprietary one. You know, ICOs, I don't even participate in them. I've participated in a couple over the last couple of years, just two actually, but otherwise I don't really participate in it anymore. I think EOS is a good one to look at as well. I mean, the coin itself is kind of pointless now, but the EOS platform, I think once things get smoothed out a little bit, I think we're gonna have a good a good space for new things to enter into. I know EOS has gotten a lot of flack. I was a big bear for EOS, and I was a big critic, but now I've turned pretty bullish on EOS though. So EOS is good. Let's see, there's other coins. Let's see, Walton coin. Oh yeah, WTC. That's right. Walton Coin, I think even from a trading aspect, is in a fantastic condition because it's very, very much lagging its peers. It's lagging. It's lagging like almost every other single coin as far as its current structure. Yeah, and that's right. I did get an alert on this when I was having lunch with my wife. This is actually a great buy signal on the hourly for WTC or Walton Coin. We've got all the conditions met for going long, and we have the cloud ahead, the span A, span B, or the Senko span A and B. They've crossed. Price is above the cloud. Lagging span is above price in the cloud. And we've got the conversion line greater than the base. Just everything's met there for the long condition based on the hourly. Never mind the oscillators for that kind of stuff. So the present value area of this is perfect. And so if this is something that you want to speculate with and get in the trade in, but you're going to do it on the, if they don't have a tether pair for it, which I don't think they do, then the Bitcoin pair, then really, if I put something in there like at a price level of the dollar, I will, I mean, you can just go to the Bitcoin pair and put in the buy for that relative area. So, excuse me. Kyber Network, there are so many, I'll say, yeah, I mean, so a lot like, what's the similarity between Waves, Steem, EOS, the Kyber Network, Next, Bitcoin, Ethereum? What is their, well, not Bitcoin, take that away. What are those coins, quote unquote? They're platforms. They're platforms for doing other things in their environments. I mean, really, there's three kind of classifications of cryptos out there. There's platform coins, or there's platform cryptocurrencies, where they're there to be built and used as a ecosystem, like Ethereum, like EOS, Cardano when it's finally all up and running, or they are used as a form of payment currency, like privacy coins, like Zcash. And then what did I say? There's privacy coins, there's cryptos, environments, platform coins. Oh, and then there's just cryptocurrencies in general, where they're just used as a source of a medium of trade, kind of like Dash. I guess there's a fourth coin in there which makes up the majority of cryptocurrencies, and those ones are scam coins. Okay, so there's a lot of those out there. There's a lot of really crap coins, like what am I thinking? Litecoin Cash. It's stupid. Cure Coin. It has a nice idea, but it's not going to last. Dentacoin. Yeah, utility coins. Yep. Dentacoin. Dentistry. Yeah, I don't know about that. There's some weird ones. Yep, utility coins that provide a... I guess they could... I've kind of rolled that through my head, like a lot of utility coins are also platforms, but not all platforms are serving a specific utility. Meme coins. Those go in the scam coins category. Utility coins and platform coins, those are all I think you can put them all under really one roof for the most part. But there's plenty of utility coins that are scam coins. I mean, there's so when I think of something like the Kyber Network, okay? Here, I just pulled that up. Kyber Network. We have an ecosystem. It's a lot like what Waves. Waves platform or NXT. Waves is a crazy fast platform. NXT is I like NXT. NXT's good. It's stupidly cheap. I think most of everybody transitioned to Ardor though. Yeah, NXT's platform, Kyber Network's platform. I mean, there's so many platform coins out there. And the thing is that some of these platforms may be better than Ethereum. I mean, Ethereum only got to be where it is because, well, just probably by accident. I don't know. Ethereum is. I'm not really that bullish on Ethereum. Just something about it. I mean, I trade it. I mean, I'm holding a position in it right now to trade, and I actually am holding some long term. But I mean, I'm really not that big of an Ethereum bull. I think there's other things that are better, that exist already and that are coming out. So, ultimately, what we're going to see is that there are some existing platforms, like some we've discussed today, that are very, very good. And as soon as more institutional money comes in here, and as soon as businesses in general adapt to the, blockchain is really just kind of an updated, it's like a business, how businesses exist and operate. I mean, everything's changing with that underlying blockchain technology. It's like blockchain is to cryptocurrencies what the internet was to the .com boom. I mean, that's really what we're living through right here. That's the best analogy I can give. You don't really have to understand the technology behind blockchain to understand its impact and what can be done with it. Same as in the 90s, you didn't have to understand how the internet worked, but you knew how important it was and how much of an impact it was going to make. So that's really what we're participating in right now. Is Verge a scam coin? No. But what's his face? Anything he talks about, if it gets pumped up, I would short the hell out of it. John McAfee. Ugh. I would hate to be a crypto where his lips spoke my ticker sign. I would really hate that. Verge is not a scam, but it's I don't know. It's weird. So yes, let's look. Oh yeah, XLM. I want to look at XLM for a second as well. XLM is actually into, I'd say, just at a break of the cloud, because it's got the same structure as, a lot of them. We've got this bullish flag forming. So, but on XLM, it's at like the 33, 31 probably. Yeah. Looking ahead, we're going to do some price projections. If you remember, on Monday we went over a lot of these. I'm gonna go back, do a little rehashes. That there's a pattern that shows up nearly every year. Okay, this is from back in 2010. This is Bitcoin chart. Okay, summer of 2015 into the fall. Wait, no, that's not right. I'm looking at a different chart. Anyways, looking at the patterns, we see this pattern drive up here. We see this pattern drive up here. Bitcoin is like a great example for somebody who was in their Econ 101 course to find a chart that had an example of what a bubble phase is, and you have repeating examples of what a bubble looks like. Bitcoin loves to form bubbles. So we have the bubble. See this again. Then there's kind of a drop off between the Mt. Gox years, but we see these rises again, these drops, even here into, this was into early 2017, and then finally we have this here. So really what we observe is we see the summertime trading from June through September 22nd is where we observe Bitcoin having a pretty slow to neutral. Either it goes up a little bit or it goes down a little bit or it just stays flat. There's really not a lot of big moves that happen in the summer, not in any markets really. That's not common. But we generally, I think there's 1 year out of the last 10 where Bitcoin did not have a huge expansionist, a huge bullish, a monstrously large bull market in the fall. I think there's one year that didn't happen. I think that was the Mt. Gox year, or the year after the Mt. Gox debacle. So this I mean, what we're seeing here is totally normal. We see this bubble happen. When the gal at the grocery store was telling me back in late November that asked me, I live in a small town, so everybody knows each other, and I asked, John, do you know anything about Cardano? When the lady in the small town in South Dakota asked me something about, not about Bitcoin, but about Cardano, I assumed we were probably at a high somewhere. We entered into that euphoria phase. Okay? So we're going to see that happen again. There's nothing to say that it won't. We should expect that to happen between now and December. There is really no bad area to enter the market on the long term. There's going to be a bad place to get into the market, though, every day moving forward. You do not want to participate in this market above 10,000. You want to participate in this market below 10,000. All right? And then probably in a year and a half, we will be saying the same thing about the $20,000 area. We'll be saying you do not want to participate in this market below 20,000. You want to participate below 15,000, between 10 and 15. All right. Anyways, I hope you guys have a great rest of your Friday. Take it easy. Check out from the market at least one day on a Saturday. Trading is exciting. It's fun. There's a lot of excitement that comes from the anticipation of a move and making money. There's a lot of disappointment. You need to give your emotions and your brain and anybody who lives with you a break from the market, and you need to just detach. So do that on Friday afternoon and evening all the way into Saturday, and come back to it Sunday morning. Take care of yourselves this weekend, and I will look forward to talking with you again next Monday at 1 o'clock. Please like and subscribe, and I will talk to you all later. Bye-bye.